Let's walk through the steps of how to prepare a worksheet. So the first step is to fill out the trial balance section. So you'll list out all of your accounts, right, in order of assets, which are in order of liquidity, then your liabilities, then owner's capital, owner's drawings, revenues, and expenses. So you'll list out those accounts and then list their balances in either the debit or the credit column. Then you'll add up your debits and credits and make sure that they equal. So once you've filled out the trial balance section, you'll notice the next section says adjustments. So for this one, we're going to need some adjusting entries. So we'll use these three adjusting entries here for depreciation, prepaid rent being used up, and using some supplies. So we'll have those three adjusting entries over in the upper right corner. And we'll reference these as we go through this adjustments section. So you'll notice that some accounts were added at the bottom. That's because there were some accounts in these adjusting entries that we hadn't already listed on our worksheet. So you'll sometimes have to do that here in the adjustments section. So this first one, you debited depreciation expense and credited accumulated depreciation equipment for $3,000. So you'll notice that those two were written down below the rest of the accounts, and we write in the $3,000 in the debit column and the credit column for those accounts. Next one, rent expense, $1,000, and prepaid rent credited $1,000. Well, we didn't have rent expense either in our original list of accounts, so we had to write that one in and show that as a debit of $1,000. And then we go up to our prepaid rent, which we did have in our original list of accounts, and we show that that account's being credited $1,000. Then our final adjusting entry, we debited supplies expense and credited supplies for $3,500. Here, we didn't have supplies expense originally, so we had to add that one in at the bottom. So we show that that account was debited $3,500. And then we go back up to supplies and we show that supplies was credited $3,500. Now, after you list out all of your adjustments, you need to add up your debit and credit column to show that they equal. After you fill out your adjustments column, the next section is for an adjusted trial balance. So what we're going to use here is we're going to use our original trial balance information with our adjustments that we just filled out to show the new updated balances for all of these accounts. So you'll notice a few have changed, right? Let's start with supplies. Originally you had 5,000. Then in your adjustments you showed that you used up 3,500. So the adjusted trial balance shows a balance of 1,500 in that account. Prepaid rent, you originally had 24,000. You used up 1,000 and now you have 23,000 left. So now you've filled out everything through the adjusted trial balance. And now your next two sections are for the income statement and the balance sheet. So for the income statement, you'll be listing out the accounts that would appear on an income statement, right? Those are your revenues and expenses. The balance sheet is everything else, right? So let's fill this out. So on our income statement, we had our revenue of 45,000, and then we had our 5 different expenses. Right, we had salaries, advertising, depreciation, rent, and supplies. We had all of those listed on our income statement. On our balance sheet, we had our assets, and make sure you also include your contra asset, your accumulated depreciation. And then we also had our liabilities, capital, and drawings. Now, when you add up your debit and credit columns here for the income statement and the balance sheet, you'll notice these don't equal. And that's okay. There's a reason why they don't equal. So if we take a look at the income statement itself, our credit column are the total revenues, right? In this case, we only had one revenue, but if we had multiple revenues, our credits would be all of those added up. Our debits are our total expenses. So, in a lot of cases, your total revenues don't equal your total expenses, right? In this case, we have a net income. So, we show that on the next line. And we show that we have a net income of $3,500, which we get by taking our $45,000 minus $41,500. So we add that net income over on the debit side of our income statement section. And then you'll also notice your balance sheet, your debits and credits were off by $3,500. Well, your net income increases your capital, right? So that $3,500 would have increased your capital amount on an actual balance sheet itself. So that's why we need to make these adjustments here on a worksheet. Then, after you make that adjustment, you'll want to make sure that your debits and credits equal for your income statement and your balance sheet, just like they did for the other three sections.